Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 25th of April. Starting off with the FTSE 100, where we're in record territory, and surprisingly, nobody's asked me from the papers what my view is on the market. Obviously, they prefer to ask people who haven't got a clue what's going on. Here we've got a rising trend channel there from December, top of the channel there, heading for 82.30. We're looking for that by the end of next month, or even sooner, actually, the way things are going with the M&A that we've got, Anglo American, etc. In terms of the upside, that's valid while we hold above the initial April peak, or the last April peak there, 80.44. Above that on an end of day close basis, 82.30. Our goal, if we do break down, the next level down would be 78.80, which was the initial April support, but not expecting that or anything near that to happen at this stage. In terms of the bigger picture, we're looking for 8,500 at the top of that 2007 rising trend channel, and hopefully sometime by June on that, again being rather conservative in terms of the time frame. Moving along to the DAX, which did what the FTSE is currently doing months ago, and hence a bit weaker today, but we broke that April resistance line there around 17,900. While we're above that, looking for a retest of 18,500 plus, basically the record highs there from the turn of the month. On the downside, not expecting anything worse than the floor of that rising October trend channel and the 50-day moving average around 17,800. But I'd like to see the RSI stay on the right side of neutral 50 with 51, the current reading. Moving along to the Dow, and here you can see that stalled below the 50-day moving average. That's 38,800, hoping that this market will stay above 38,000 and the floor of the rising October trend channel in the meantime. The bigger picture here, obviously, is that while we're within that channel above 38,000, then looking for 40,000 plus, maybe by the end of next month. But obviously, at the moment, that seems a little bit optimistic. Moving on to Bitcoin, and here the picture, I suppose, less good than it has been in terms of seeing this market fail at the 50-day moving average, 67,000 at the moment. That leaves us with a chance of retesting the 60,000 zone. We obviously had a little bear trap below that last week. Worst case at the moment, probably looking for 57 or 58,000, which would stop out the people hoping the market would stay around the $60,000 area and then go up again. And in terms of the best case here, we need an end-of-day close back above the rising 50-day line, 67,000, to give us that $80,000 target by the end of next month. Not a great look in the RSI window at the moment. We failed at neutral 50, so that is something to be concerned about, at least in a modest way. Moving on to gold, where we had the rug pull at the beginning of the week. It looks like we've still got this rising trend channel from February operational, although it's wider than we were looking at it or seeing it just a few days ago. The support there already 2,300, and we're looking for that to be maintained ahead of a move to the top of the channel there, size 2550, maybe by the end of next month. That sounds a little bit spicy in terms of the time frame, but obviously we're hoping that gold is in an ongoing serious breakout. Moving along to the stocks of the day, and a lot of blue chips at the moment, maybe to emphasize that we are looking for a breakout in the FTSE, so for 8,000 to hold and go to other greater glories. Just updating the Anglo American chart here, we had that falling trend channel from the end of July last year. That was the initial target there after the unfilled gap to the upside from March, above the recent resistance around 2250, looking for that June resistance line projection as high as 2660, but obviously the fundamentals here are going to be important. In terms of the downside, we don't want to see this stock go back below the old December resistance around 2320, but we really have gapped up into higher territory. Similarly, looking interesting looking chart here for AstraZeneca. Here, the points of interest are the in the recent past, the gaps to the upside, especially the two unfilled gaps that we've just got over the course of April. First one was filled. Rising trend channel here, heading for £135, and really looking for that to be hit as soon as the end of next month. Ideally, we stay on the right side of £118 in the meantime, as that was the old June 2023 resistance on the way down. Final point to note here is that we've got both the 50 and 200-day moving averages rising at the moment. That suggests we're in the run-up to a golden cross, and looking for that to happen by the end of next month, or in fact, probably in the first half of May. Moving along to another blue chip, which is Barclays, and just to show the spread of the breakouts that we're having at the moment with the blue chip stocks, unfilled gap to the upside in February, and a gap closed by signal earlier this month. The current position is that we're looking for £2.20 by the end of next month, while we remain above the initial April resistance at £1.94. I suppose you could give it down to £1.90, the recent support, but ideally we just keep going up from here towards £2.20 in the top of that October resistance line projection. On to smaller stuff, and starting off with Barkley Energia, where it's interesting that the shares seem to be responding to political triggers in Spain, and this current situation is that we've broken through the 200-day moving average for the first time in, basically since back in August. That 200-day line at 18.5 and above that, looking for 24 by the end of next month, and just looks like a rather better pattern there, sort of cup and handle type pattern, with the handle just hopefully breaking through 19.5 over the next few days. Caspian Sunrise is next, also looking quite attractive. Here we bounced off the combination of the 50 and 200-day lines around 2.9, looking for the shares to hit the top of that broadening triangle from September at 4.25 as soon as the end of next month. The other point to note is that we had a gap higher last month, and we failed to fill that gap, so failed gap fill setup tends to be a very good bullish signal. Moving on to Eco Animal Health, and here we've had Bear Trap Island reversal, so gapping down to new lows and then gapping up from that above the 50-day line. The view at the moment is above the floor of the latest gap at 94, looking for basically a return to 110 to 115 by the end of next month, within that falling trend channel from last summer. Next up is another Eco, in this case Eco Atlantic, where I have been following the shares up after being goaded into it. Here we have the bear trap rebound from below 8.5, which was the initial April support, above 8.5, looking for at least 11.4 of the 200-day moving average. Ideally, we get back up to 12 to 13, which was resistance and support on the way down. On to Hummingbird, which delivered a decent RNS today. At least there were no new mishaps, and the shares looking rather better as well. The old low there in October around 8.75. Above that, we've been looking for 11 or 12, ideally by the end of next month, hopefully driven by the rising gold price. On to Kromek, which had a decent another contract win today. Here we are retesting, or set to retest, the top of that broadening triangle from this time last year, as high as 8. Above that, looking for up to 10 by the end of next month, the longer we stay above recent support around 6.8. Next up, a requested stock, strip tinning, and here just breaking the 50-day line after an unfilled gap to the upside at the turn of the month. The fact that we have had that bear trap gap reversal is a decent sign, and does suggest that we can return to the 50 area as soon as the end of next month, although we are aware that this is not the world's most active stock. On to Tirupati, where you can see that we've got a potential rising trend channel base, and here the shares popping up after a sideways action near 5.75. Best that we can say at the moment is maybe over the next couple of weeks we head up to 7.6, which is the top of that rising trend channel. But the key here really is breaking the old March resistance at 6.7, and signalling that a low is in place, or a potential low is in place for the shares. Finishing off with Unilever, and here the interest is that we've had our second gap higher of this month, bear trap gap reversal, so another very bullish situation to drive the London market, hopefully to higher glories. Rising trend channel base there since the beginning of November, and looking for a move to £42 over the near term, maybe the next 2 to 3 weeks, something like that. Ideally, we stay on the right side of the floor of the gap, or top of the gap there at £40. That's it for me today. More updates tomorrow.